Hey everyone, it's Heschel and let's talk about the dollar. In this video, you'll learn about 7 assets that can help you build wealth even if the dollar loses its value. From tangible assets like precious metals and real estate to digital currencies like Bitcoin and strategic investments in foreign markets, we'll cover it all. Make sure to stick around until the end of the video, where I'll share a bonus tip that could be a game changer for your financial future. For centuries, gold has been the go-to safe haven asset during times of economic turmoil. Why? Because it's a tangible asset with intrinsic value. When the value of paper money declines, gold tends to hold its value or even appreciate. Remember the financial crisis of 2008? Gold prices surged while the stock market plummeted. That's the power of gold as a hedge against inflation and economic uncertainty. But gold isn't your only option. Silver, often called poor man's gold, offers similar benefits at a lower price point. And then there are other precious metals like platinum, palladium, and rhodium, which are used in various industrial applications, further increasing their value. Now, I'm not saying you should go all in on precious metals, but having a portion of your portfolio allocated to these assets can provide a valuable safety net if the dollar stumbles. Understand the different ways to invest in precious metals, from physical bullion to gold ETFs and mining stocks. Investing in precious metals isn't about getting rich quick. It's about preserving your wealth over the long term and hedging against the unexpected.
Now, let's dive into the world of cryptocurrencies, specifically Bitcoin. Bitcoin has taken the world by storm, with its price soaring to unprecedented heights and then experiencing dramatic crashes. So, is it the future of money or just a speculative bubble? Bitcoin is a decentralized digital currency, meaning it's not controlled by any government or financial institution. Transactions are recorded on a public ledger called the blockchain, which is maintained by a network of computers around the world. Proponents of Bitcoin argue that it's a hedge against inflation, a store of value like digital gold, and a way to achieve financial freedom from traditional banking systems. However, critics argue that Bitcoin is highly volatile, prone to manipulation, and used for illicit activities. They also question its intrinsic value, its scalability, and its environmental impact due to the energy-intensive process of mining new Bitcoins. If you're considering investing in Bitcoin, do your research, start small, and be prepared for a bumpy ride. Remember, investing is a marathon, not a sprint.
Let's explore another powerful way to diversify your portfolio and potentially profit from a weakening dollar, investing in foreign stocks and mutual funds. This strategy can open up a world of opportunities that you might not find in domestic markets alone. When you invest in foreign companies, you're essentially buying a piece of their future growth potential. This can be particularly exciting as these companies often operate in rapidly expanding industries. Some of the fastest-growing economies in the world are located outside the United States. These economies are often characterized by high rates of innovation and development. Think about emerging markets like China, India, and Brazil. These regions are not only growing quickly but also transforming their economic landscapes. These countries have large populations, rapidly expanding middle classes, and a growing appetite for consumer goods and services. This demographic shift can drive significant economic growth. Investing in companies that are well-positioned to benefit from this growth can be incredibly lucrative. These companies often have the potential to deliver substantial returns, but you don't have to limit yourself to emerging markets. There are plenty of opportunities in more established economies as well. Developed countries like Japan, Germany, and Canada also offer attractive investment opportunities. These markets can provide stability and steady growth. The key is to identify companies with strong fundamentals, solid track records, and a competitive edge in their respective industries. Doing thorough research is crucial. One option is to invest in foreign mutual funds or ETFs. These investment vehicles can offer a convenient way to gain exposure to international markets. These funds pool money from multiple investors to buy a diversified basket of foreign stocks. This diversification can help mitigate risks. Another option is to invest in American Depository Receipts, ADRs. ADRs provide a way to invest in foreign companies without dealing with foreign exchanges. ADRs are essentially certificates that represent ownership of shares in foreign companies that are traded on U.S. stock exchanges. This can simplify the process of international investing.
Let's talk about real estate. a tangible asset that has been a cornerstone of wealth building for centuries. From ancient civilizations to modern times, owning property has always been a symbol of stability and prosperity. Unlike stocks or bonds, which can fluctuate wildly in value, real estate is a physical asset that you can see, touch, and most importantly, live in. This tangibility provides a sense of security that other investments often lack. One of the main advantages of real estate is its potential for appreciation. Over the years, property values have shown a tendency to increase, making it a reliable long-term investment. Over time, as demand for housing increases and the supply of available land remains limited, property values tend to rise. This scarcity factor plays a crucial role in driving up prices. This means that your initial investment can grow significantly over the long term, providing substantial returns that can outpace inflation and other economic factors. But real estate isn't just about appreciation. It offers multiple avenues for generating wealth. It also generates passive income through rental payments. This steady income stream can be a game changer for your financial stability. By owning rental properties, you can create a steady stream of cash flow that can supplement your income or even replace your job altogether. This financial freedom is one of the most appealing aspects of real estate investing. Real estate can be a hedge against inflation. As the cost of living increases, so does the value of your property and the rental income it generates. As the cost of goods and services rises, so too do rental rates and property values. This ensures that your investment keeps pace with the economy. Now, I know what you're thinking. Real estate is expensive. And you're right. It can be a significant upfront investment. However, the long-term benefits often outweigh the initial costs. But there are ways to get started with real estate investing even if you don't have a lot of cash on hand. Creative financing options and partnerships can help you break into the market. One option is to start small with a rental property in an up-and-coming neighborhood. These areas often offer lower entry costs and higher potential for appreciation. Another option is to invest in real estate investment trusts, REITs. These allow you to invest in real estate without the need to manage properties directly, providing a more hands-off approach.
Let's talk about the most fundamental asset of all, land. It's the bedrock of our existence and the cornerstone of our civilization. They don't make any more of it, which makes it a finite and inherently valuable resource. This scarcity is what drives its enduring worth. Unlike stocks, bonds, or even gold, land is tangible, it's real, and it's not going anywhere. You can see it, touch it, and use it. Throughout history, owning land has been synonymous with wealth, power, and stability. Kings and emperors have fought wars over it. It's the foundation upon which we build our homes, our businesses, and our lives. Every structure we create starts with a piece of land. And while the value of other assets may fluctuate, the value of land tends to hold steady or even appreciate over time. It's a reliable store of value. Think about it. As the population grows and urban sprawl continues, the demand for land increases, driving up its value. More people means more need for space. This makes land a potentially lucrative investment, especially if you're patient and have a long-term investment horizon. It's about playing the long game. But land isn't just about potential profits, it's also about security. It offers a safe haven in uncertain times. Owning land provides a sense of independence and self-sufficiency. It's a piece of the earth that you can call your own. It's a tangible asset that you can pass down to future generations, creating a lasting legacy for your family. It's a gift that keeps on giving. Just like with real estate, the value of land is heavily influenced by its location. Prime locations can significantly boost its worth. Before you invest in any piece of land, it's crucial to research the zoning regulations, environmental factors, and any potential easements or encumbrances that could affect its value. Knowledge is power when it comes to land investment. So there you have it. 7 assets that can help you build wealth and protect your savings, even if the dollar stumbles. From precious metals to real estate, foreign currencies to cryptocurrencies, and the enduring value of land, we've covered a lot of ground today. Remember, diversifying your portfolio is key to mitigating risk and maximizing returns. Don't put all your eggs in one basket. Thank you so much for watching. Until next time, have a great day.